If you're a doctor in California, stop whatever you're doing right now and make your pass-through entity tax payment by June 15th. This is a tax payment that will save most doctors who have an S-corporation around $6,000 or more in federal taxes. But it's something that's a little bit confusing to understand, and most people don't do it, but make sure you do it. And you only have a little bit more time before you can elect into this program. And I'm gonna break down what this is and why every doctor in California should be looking at this. Here's how it works. Your S corporation makes income. We call that net income. But your S corporation does not pay any income tax inside of the corporation. Instead, any income that you will pay tax on flows through into your individual tax return. And on your individual tax return, you'll have a federal tax that you will pay, and you will have a local California tax that you will pay. Now let's pretend that you make $300,000 inside of your S corporation. That $300,000 will flow into your individual tax return on both the federal taxes and California taxes. And in this example, that $300,000 will probably equate to about $18,000 in California taxes. Now, back in the day, that $18,000 used to reduce your federal tax income so that you were only taxed on, in this example, $282,000. But in the current tax code, you don't get that benefit if you pay property taxes or if you use the standard deduction. It's limited at $10,000, and most people aren't really getting any benefit for their California taxes. So people are having to pay income tax on the full $300,000, and let's assume in this example, that's $50,000 in federal taxes. Now let's assume you make the pass-through entity tax payment. This payment happens inside of your S corporation. You will take that $300,000 of net income that you made, and you'll calculate the pass-through entity tax, which is 9.3% of your income. That will take your taxable income from your S corporation down to $272,000. That number will flow to your federal tax return. And making the same assumptions we made last time, that will equate to about $44,000 in federal taxes. So in this example, with somebody who makes roughly $300,000 in S-Corp income, with no pass-through entity tax deduction, they were paying $50,000 in federal taxes. With the pass-through entity tax deduction, they're now paying $44,000 in federal taxes, which saves them roughly $6,000 in federal taxes. This will change in everyone's specific situation, but it could be more, much more than $6,000 or less, depending on your S-Corp income. If you want to realize these tax savings, you need to act before June 15th. That's when California requires you to make your first pass-through entity tax payment. If this is your first time doing this, all you need to pay is $1,000. However, if you've done this in the past, you need to figure out how much you paid last year and pay 50% of what you paid last year by June 15th of this year. If you're not sure how to do this or if this applies to you, feel free to reach out to me with any questions. You can DM me or shoot me an email. But at the end of the day, you want to make sure that you do not leave thousands of dollars on the table.